Hi everybody, this is Lance from ThetaTraders.com. This video we're going to go over technical analysis, economic reports, and earnings reports for the week of July 23 to 27. Let's get right to it. We had a few down candles. We were hugging below the 9 EMA, that's the yellow line, and we did bounce above it earlier this week and then fell slightly below it. We did touch the 21 EMA on SPY, but then recovered slightly above it. If we do break below the 21 EMA on SPY on the daily, then it could be more of a downturn. Let's look at volume profile. So volume profile, we have a lot of volume at the 598, which we did just cross below it because we're at 594. Down to the 592 is another level, so only have 2 points away here. We could easily hit the near max of volume for that particular price. Have another level at the 587, and if we get below the 587, there's not much volume below this, all the way until 560. So have to hug and stay close to this 590 level in order to be okay in terms of being bearish. It is a slightly bearish outlook right now. And let's look at the expected move. So 6 days from now, expected move is 11.7 points. It ends up being about 2%. Nothing too dramatic there. Just be aware of the volume profile. If we look at the volatility, we're at 20.62. And if you look at the daily, we're hugging near 16, recovered up, and then volatility did go up a little bit here due to Trump, Iran-Israeli tensions, and it leveled off a little bit. You know, Trump said he's giving 2 weeks for Iran in order to make a decision on if they're going to reconvene or do some action there. So the next week is probably okay. The week after might have more volatility in the market. Lowever, we don't know what's going to happen in the future. If the tensions between Israel and Iran go up, the volatility could go up as well. Let's look at QQQ. QQQ is a very similar story. We hugged below this 9 EMA, went above it, dropped below it, and we're still above the 21 EMA. Volume profile, have a lot of volume at the 531, which did get broken. 517 is another level to consider, and if we break through the 517 and it doesn't act like support anymore, we have a very low volume all the way down to 486, so you just got to be aware. If we break that 517, we could drop even more. The small caps IWM, we did cross below the 9 EMA. We were still below the 200 simple moving average, and we are slightly above the 21 EMA. A lot of volume at the 208, which is slightly lower than the current price, but not much volume after that. RSI, MACD. RSI is pretty stable though at the 53. We're coiling above and below and crossing. However, we are above in the MACD. If you look at SPY on that, it's very similar to SPY, QQQ, IWM. We're at the 51, which is fairly neutral in the RSI. We've been crossing above and below in the MACD. So as of now, it's fairly bearish, but not necessarily a ton. If we do cross below that 21 EMA on all these positions, there could be some further downturns. Let's look at the economic reports. We have FDX, FedEx, General Mills, Walgreens, Nike. Let's look at a couple of these. Nike first. Nike has been pretty bearish. We're below the 9 and 21 EMA. Have a bit of volume at the 56, and we're 59.79. If we have bad earnings there, it could easily drop below it. So I would consider for a possible earnings play to go 6 days out. I'd look at a bearish setup. We would want to probably either sell call credit spread around the 68 or so. If you look back at the charts here, didn't cross 68 until March. So you could consider selling a 68, and then you could buy a few width away, maybe 5 width at the 73. You get 24 premium, not a ton of premium, but relatively safe position. If it does end up expiring worthless, you would make $24 out of a 5 width spread, which is $500, which is still reasonable. Let's look at Walgreens, WBA. WBA's been dropping a ton. And it was at 11. We went down to 10 at one point. But if you look at the yearly chart, and we were up in the 12 area. I wouldn't necessarily touch this position. It's been having a lot of trouble lately. But if you are interested in it, we do have a lot of volume at the 11 strike. I would consider, if you wanted to enter into this position, the low is at 8. You might want to sell an 8 or a 9 cascade put. And there's not really any premium there, so I probably wouldn't even bother with it. FDX. FDX is a pretty highly priced stock, so you probably want to do a credit spread on it. 226. Low is 194. High is 238. Have a bit of volume at the 218. RSI is 54. MACD is flat. I would consider an iron condor that you buy, so a reverse iron condor, very close to at the money. So 6 days out, 225 or so. You could buy it, sell maybe a 222.5 or 220, and then do the same thing on the call side, buy a 225 call, and then sell a 230 call. It's a 5 width spread. You're getting 4.63 possibly. With the market closed, it's hard to know exactly what you filled in. But if it goes above the sold call or below the sold put, then it would be at max profit. So if you could get in for around 4.7 or less, then you can make $30 off $500 in that position. Last are the economic reports. For Monday, just flash manufacturing and home sales. There are a few of the FOMC members speaking. Probably not a dramatic volatility day. The 24th, a few more members speaking. Powell will testify. I think it's in front of Congress. Semi-annual monetary policy report. So this might change the market a bit. If you get subtle clues about the monetary policy, we might see more volatility on Tuesday. Wednesday, Powell's still testifying. Thursday, we have GDP and unemployment claims. Unemployment claims could change the market. This always happens an hour before market opens. So I'd say Tuesday and Thursday could be the most dramatic days where we might see more volatility in the market. Again, this is the economic technical analysis and earnings reports for the week of June 23rd to 27. If you have any questions, leave a comment down below. Appreciate your support. Subscribe to the channel to get regular updates on these positions every week, and I'll see you guys on the next one.